Welcome to everyone to this webinar on ethics and trust in accounting and auditing, organized by the Observatoire de la Finance, based in Geneva. I'm Virgile Perret, project lead at the Observatoire, and I will have the pleasure to moderate this roundtable discussion. Just before introducing our guests, I would like to recall that this webinar is part of a series of events that we organize to support the Global Prize Ethics and Trust in Finance for a Sustainable Future. Just 2 words on the competition. So the Global Prize is a biannual essay competition open to authors under 35 years old, working either in academia, business, or in the public sector, and eager to promote new ways of bringing greater levels of ethical awareness and behavior to the various segments of the financial industry, including in the insurance sector. So we are currently closing the 9th edition of the Global Prize, and we are glad to invite all interested people to attend the award ceremony that we will organize in November, on Tuesday, 28 November, sorry, between 4 p.m. and 6 p.m. So the program will follow soon, and more information on our website. You can also contact me directly for more information. But for now, it's just to save the date for the award ceremony. At this event, we will have the opportunity to listen to prestigious speakers and to congratulate the winners. Right, so now I would like to introduce our guests. I will proceed by alphabetical order. I will start with Marie-Ève Fortier. Welcome, Marie-Ève. Marie-Ève began her career with PricewaterhouseCoopers in Montreal back in 2002 and joined the Geneva office in 2005, as part of the International Mobility Program. She provides external audit services to private, cantonal, and international banks, as well as to securities dealers, and is a lead auditor recognized by FINMA. She has experience in leading and managing a team to evaluate the design of internal control systems, test effectiveness of controls, and to assess compliance with Swiss banking regulatory requirements. So thank you and welcome, Marie-Ève.
Thank you.
Welcome to Maggie McGee, Executive Director at the Association of Chartered Certified Accountants. I will call it ACCA, it will be shorter. Welcome, Maggie. Maggie leads ACCA's development of strategy and ACCA's corporate governance arrangements and the governance of ACCA members and students. Prior to joining ACCA in 2016, Maggie was Director General at the UK National Audit Office. Maggie also worked for PricewaterhouseCoopers in the Advanced Regulatory and Compliance Analytics area, applying specialist analytics tool in the banking and capital market sector. Thank you, Maggie.
Thank you.
Hello, Frank Missonnier-Pierrat, and welcome. Frank Missonnier-Pierrat is full professor at the University of Fribourg and holds the chair of accounting and financial analysis since 2013. He's a doctor in managerial economics from the University of Geneva. He's also chartered professional accountant, certified management accountant, and he has been professor at HEC Montréal, HEC Lausanne, ESSEC, EM Lyon, and at the University of Geneva. So thank you, Frank, for being with us.
Thank you.
So now I will start our roundtable with a general question to all of us. Why is ethics an important topic for professional accountants and auditors? So please feel free to express your view.
Should I start, Visual, because I'm in the alphabetical order?
Sure.
So maybe from an audit perspective, I think ethics is really critical for our profession, for our firm. I mean, how we behave as an influence on the quality of the work that we are performing. So having the courage to say what's going wrong, we do this to serve the stakeholder because they engage us to identify those kind of issues. So for me, that's really key in our profession, being ethical.
Excellent. Thanks very much, Maria. Shall I go next, following on an alphabetical order? I think, firstly, I would say ethics isn't an easy subject. And I think it's important to remember that. It's very complicated and it has lots of different nuances, but it is critically important in the business environment. If you fail to adapt the proper standards, that can have a devastating impact on organizations, their investors, their supply chains, their employees, and indeed, actually, their customers, but also the society in which they are placed. And we've seen that with sort of very large corporate failures, which, if you look at some of them, do have ethical behavior at the very heart of it. If we look at the sort of going back in time to Enron, WorldCom in US, Parmalat in Europe, UK, you'd have Barings Bank, Polypec, Maxwell. And actually, at the root of all that is someone saying yes when clearly the rest of society is going, no, you should have said no. And I think that's why it's so important that professional accountants and auditors all act with an ethical underpinning. And we know that these stories, you know, in the modern world, people have access to them. They can join the connections, they can make the whole story, the whole narrative. And I think that gives them even greater global prominence, whereas perhaps previously they didn't have.
Well, I guess it's my turn. I would say it's one of the main aspects actually in the business, in a sense, for the public sector or for the private sector also. If you want to continue to trust the financial statements, which is maybe the main information in many to report the activities of the whatever organization, we need this trust and confidence in the auditor. So they are yes, it's fundamental, I may say. And actually, it's been a long time that we have this type of issue that from the last century in the 19. If you want to be a CPA, an auditor, you have this code of the profession. So it's been a long time. This issue has been addressed. Of course, it's not that perfect, but they know that we have this those standards to follow.
Thank you for your answers. Yes, indeed, trust is very important, as you all underline, and of course, accountants and auditors have access to very sensitive financial information, so ethics is central in their work. So precisely, Frank, you were mentioning the code of ethics. So my next question would be to you, Maggie, about precisely that point. To preserve trust and ensure a good image of the profession, accountants and auditors should be encouraged to respect ethical principles. So is there an accepted code of ethics within these professions?
Yeah, and following on from Frank's comment, so I think it's important. Trust is absolutely critical to the work we do, and trust is built slowly, but can leave really, really quickly. So the answer is yes. So there is an international code of ethics for professional accountants, and that's issued by IESBA, so the International Ethical Standards Board for Accountants. So all accountants are members of an IFAC body. Actually have to subscribe to that. So from an ACCA perspective, as I said, I'm responsible for the governance of our members. So we set a rule book, and that rule book is based on that code of ethics. Now, we add some additional elements to make it specific to the locality and the work that we do, but it is based effectively on 5 fundamental principles. And those are integrity, objectivity, professional competence and due care, confidentiality, and professional behaviour. And I think those fundamental sort of behaviours go right to the heart of how an accountant or an auditor should act. So if you're sort of up against the wall, if you feel pressured into breaking one of those fundamental principles, then it's really important that you recognise that and that you take action in respect of that. But I also think there's one thing about the code and talk about the principles. It's also the education. So we do embed ethics the whole way through our qualification. So we have a separate module on it. But the important thing is to make it real life, because actually sometimes ethical challenges, they might not be immediately obvious as to what you're experiencing. So it's really important that you build that into real life scenarios, but you then create the right culture to ensure that people can raise their challenges. So yeah, there is a code. It has been in place for a while, and I think it's continued to evolve to meet the new challenges.
Thank you very much, Maggie, for introducing those principles: integrity, objectivity, professional competence, professional behavior, and confidentiality. I think we will go back to those principles throughout the discussions when we talk deeper about the different issues. So feel free, Marie-Ève or Frank, to intervene also if you like to add anything. Otherwise, my next question would be to you, Frank. What is really the importance of the quality of an audit? Who really cares about the quality of an audit, and what would be the impact on the market, if any, especially for listed companies?
So yes, it's quite fundamental and central for the market, the investors. In research, we can observe that when you merge many firms, many observations year after year, we try to measure the association between the market price of the firm on one side and the financial statements. And this association is stronger when you have when the audit is from a big, I would say, from Big Four. Actually, we consider that the quality of the financial statement is higher, and we observe, that's just an observation, statistically there is this stronger association with financial statements that we consider well prepared and well certified. So yes, it's recognized by the market, by investors. We can observe also that as soon as there is a qualified financial statement, that is to say there may be one issue, you can see suddenly the drop on the market price of this particular firm. It doesn't mean that the firm will file bankrupt. It means that suddenly we do not trust anymore those financial statements, and maybe the market price may increase later on, because the auditors may explain why the disqualified report. The company may also explain why we had these difficulties. So as soon as there is some sort of lack of trust, some doubt in the quality of the financial statement, the market reacts immediately.
Thank you, Frank. So would you agree also, Maggie and Marie-Ève, that those Big Four have a very strong economic power, or have a strong impact on the market? Can we say they have a strong power?
Yeah, I think it's an interesting one. They certainly have the ability to invest on a global infrastructure and global approach and global methodologies, and they have very high profile brands and huge impact in terms of, in particular, public interest entities audit. But audit covers organizations of all sizes, and there are many small and medium-sized entities who either meet the threshold in their country or opt to have an audit for the value it brings, the access to capital, etc. So the audit field is broad, but I think it's important that all auditors do understand the entity they're auditing and ensure that they provide a high quality service. In the UK currently, they are looking at how to broaden the audit market to bring in more players. They're concerned about concentration risk in it. So I think it's an interesting one that will develop, but it's very clear that the Big Four have a very strong foothold in audit and have very strong methodologies to underpin that.
So my next question is to you, Marie-Ève. Auditors are expected to serve as kind of public watchdogs, ensuring the reliability of firms' financial reporting. This role requires total independence from the client, and also a capacity of judgment. However, there is a contract between the auditor and the auditee firm, which makes this independence difficult to implement. In addition, there may be an erosion of the auditor's independence due to the social and economic bonds resulting from the relationship between the auditor and the auditee. So my question is there a conflict of interest between the auditor's duty to maintain his integrity and objectivity and his remuneration by the auditee?
I mean, for sure, Virgil, that's an important topic, and for sure there could be a conflict of interest. But at the same time, in the big firms, in big auditing firms, we have a strong regulation that we are trained to it to ensure independence and to avoid those kind of conflict of interest. And I will go back to what Maggie, she gave some good example at the beginning about some scandals that we had in the past years, such as Enron and more recently Wirecard. I mean, we don't want to be in this situation. We don't want to be the next Enron, we don't want to be involved in it. So for sure, I mean, we're doing everything to ensure that we act properly to avoid this kind of scandal, because I mean, Anderson has disappeared with Enron. We don't want to be in this case. This will cost much higher than just losing some audit fees. At the same time, what I would like to add is that, I mean, the stakeholder, we are hired by the board of directors. They hired us to added value and to raise the concerns related to the financial reporting or regulation for the banking sector. So we want to add this value. We don't want to be the one who just is doing simply his job. The board of directors is expecting us to raise the issues. We are their eyes. So for me, that's really key in our work, that we stick to this, and that we ensure that we raise the concern, even if there is a conflict of interest. And one last example that I can give is that we have a strong process in place in our firm, and I think it's in all big firms, even small fiduciary. I mean, that for the know your customer, when we have a new client, there's a huge work performed to know if we know the client we're working with. Do we want to work with this kind of client? For our reputation also, will it be feasible? Is the fee realistic? So, I mean, and I've seen situations where we disagree to work with some client because it's not in line with our values. So yes, there's a conflict of interest, but I think we're really trained and we work well with this.
Thank you, Marie. Maggie, Frank, would you agree also with that assessment that there is potential conflict of interest, that regulation, also reputation, somehow protects protects against those issues, or how would you?
Yeah, and I think Marie is absolutely right. Reputation is how a firm will be able to get business. It's how they retain business. So they need that reputation. So that is a really strong driver. But regulation also plays its part. And it is important too. So we talked about the code of ethics, independence being one of the fundamental principles. Independence of firms and independence of the auditors has been subject to huge debate, I think, recently. Lots of additional elements being brought in to try and further protect the independence of auditors. Now, that does relate to some of the corporate scandals and actually sort of making sure we're in the best possible place to respond to it. But if we think about the EU Audit Directive, that brought in additional independence requirements. It required it made a prohibition on non-audit services. So it gave it identified the services in particular that would be in the blacklist that you just cannot do. And it also brought in a cap. So actually you can earn more than sort of 70% of the fee. It's on a rolling basis from non-audit services, trying to make sure that that audit service is as independent as possible. And I think in terms of that, we've also got the mandatory auditor rotation now, which was another relatively recent development, again, brought in by the EU. And that was sort of trying to address that familiarity threat as well as that conflict of interest as in terms of who pays. So you want your auditor to know the business because that gives a good quality audit. But equally, you don't want them so familiar that perhaps they bring in some sort of cognitive bias or start to trust too much, or it challenges their professional skepticism. So the EU brought in sort of mandatory levels in terms of when audits had to be rotated, what the tenure could be. And similarly for the key audit partners, so they've limited the amount of time that that individual can spend on an audit. And again, all of these mechanics help support the firm in building their reputation to ensure that they're as independent as they can be, that their opinion is independent, but their auditors are sufficiently familiar with that sector and the business to be able to deliver the work. So there's always a bit of a tension in there, but definitely a lot of regulation in that space.
Yeah, there are some specific mechanisms, especially at the EU level, to enforce this independence. So that rotation mechanism is like they have to change the auditors every few years, or?
Exactly. Now there is sort of it's one of those where there's a lot of member state options. So if you look across Europe, you're going to see lots of different elements in terms of it. But what it does bring in is a minimum and a maximum term. So it brings in a minimum term of 1 year, which is kind of what you'd expect, maximum term of 10 years, and then you can potentially, the member state can bring in different levels, so it can reduce that 10 years. If it wants to extend that 10-year period, then it does require additional work. So you can only audit for a maximum of 20 years, and you need public tender at the midpoint, so 10-year point. So again, you're bringing in that fresh thinking. And in joint audits, so in jurisdictions where it's joint audits, it's slightly different, so it can go longer, and that's where you've got more than one firm undertaking an audit. So hopefully that gives a bit of clarity on the sort of requirements there.
Thank you very much for these explanations.
Virgil, maybe can I also add something on this? I mean, so this is the EU rules, which are not always applicable in Switzerland. I mean, if we have subsidiaries which are in the EU, I mean, of course, it will be applicable to this subsidiary. But what I can add also is that internally, we have also mandatory requirement for the partners to rotate after 7 years on the job. So this also ensures that we are not conflicted or having some family threat, some family relationship with the client. I mean, after 7 years, the partner needs to change. So there's a new view on the mandates also.
Marie-Ève, can you hear me? Yeah. Sorry, your image was frozen. I've lost connection for a few seconds. Sorry, and now you're back.
So okay.
Thank you very much for this information about the Swiss context, which was very useful. So precisely another question to you, Marie-Ève. In response to the concerns regarding auditors' independence, regulators have also focused on auditors' competence and due professional care. Professional skepticism requires an auditor to exercise due care, be competent, and follow audit standards during his audit assignment. However, in a fast-evolving digital environment, the roles of auditors and accountants reach a level of complexity that often exceeds what they've been trained to. So to what extent is technological complexity or innovation a challenge to the audit quality?
I mean, for sure, in our practice, we cannot stick to what we were doing 10 years, 20 years ago. I mean, we need to evolve as fast as the company are evolving. But we're not doing this alone. So we have specialists in our firm which are really dedicated to this complex system, IT system. Our digital assurance teams, they are really helping us to understand the flow of information, the flow of the transaction, what are the key risks linked to the system, and we're working together. I mean, we're doing the meetings together to understand how the transaction is going, how it is recorded, and on our perspective, we're trying to understand the booking, the accounting rules, if they are respected, and on their side, they're just identifying some risks that we have not seen before. So this is one point, the specialist that we have internally. And the second point is that, I mean, for sure, there's a need to upgrade everyone on these digital skills. So this is something I think all big firms are doing, actually. They're really, we are really pushing our new joiners, and they're really happy to do it because the new generation is so happy to be involved in this digital world. So, I mean, we're really trying to upgrade the skills because the objective of the auditor, as you mentioned, is to exercise judgment, professional skepticism. So we're using those digital tools also on our side to investigate the larger population and focus our work on doing the judgment. So this way we do not do this kind of methodological, all the things which are recurrent and which are not maybe value added. These things, if we can automate, and then we're really doing the things where there is some judgments. And this is something which is, I think, beneficial for us and for the clients. So.
Thank you, Maria. Yeah, because precisely you partly answered the next question I would wanted to ask to Maggie, but because of technology and complexity, there is, I think, a tendency of specialization within the industry of auditors. And I was wondering if this specialization of auditors would inhibit certain aspect of due care and professional skepticism, in the sense that if you are confronted to something very complex, technological, you may be less able to question it. Maggie, what would you think?
Yeah, and I think you're right. I think there's a tension there, isn't there, between you really need to understand a subject and understand a sector to be professionally competent and to know that you're asking the right questions. But actually, specialisms, if you only have that specialism, can give you quite a siloed view, and perhaps you can't see the holistic picture. So I think part of it is how we train our auditors to have that holistic knowledge of the audit process, whilst also developing a specialism. So knowing how their work fits into the work of the audit as a whole, because an audit is, ultimately, it's quite a binary opinion, isn't it? It's saying the financial statements as a whole are true and fair. And so you need to be able to understand your work within that. So I think in terms of this specialism, I think it's important that people do develop specialisms, understand things in depth, because as you said, business is getting more complex. So actually that sort of broad but shallow view is never going to allow you to properly challenge in terms of it. And then I think linked to that is making sure that you have that professional skepticism throughout. And Maria's talked about it. We've talked about it a lot. I mean, to me, that is very much at the absolute heart of a good quality audit. If you're professionally skeptical, willing to actually be proved wrong, because often you exercise professional skepticism and there's nothing there. It's not that you're always exercising it and finding things. So I think it's actually having the confidence to exercise that professional skepticism. And that comes from having a knowledge of the area you're auditing and being able to go against the management's experts, because they're also deep experts and specialists. So I think there can be a tension, but I think it's really important that we have that depth of knowledge within the audit team, as well as that broad understanding to support that overarching opinion that's provided.
Yeah, thank you, Maggie. So somehow you also say that knowing the complexity of the subject may actually help you to implement your professional skepticism.
Absolutely. Yeah, I think it allows you to ask the right questions of your experts, because you need to be able to think how they're thinking in terms of coming up with their view. So you need to know a lot to be able to challenge. And audit teams, they do bring in experts all the time from across firms. So you'll have the core audit team. They'll bring in their experts from, their pension experts, their valuation experts. So auditors themselves are used to working with experts. They're used to say, look, these are the objectives we need to get to. These are the sort of areas where I think we need to exercise judgment. So it is an established now part, I would say, of an audit team, where you have the core team, you're bringing in experts, and people are developing their own areas of specialism as they develop in their careers.
Thank you. To stay with technology, which is a hot topic and a challenge, I guess, for these professions. One of the hot topics precisely is artificial intelligence. And so my question goes to all of you. I will start with Frank because I think it's probably his turn now. Is the emergence of artificial intelligence a challenge or an opportunity for auditors and accountants? What would be your view, Frank?
That's not an easy one, but I would say both. It's a challenge and opportunity. I would say it depends of the speed of the development in the artificial software and so on. It's more. It could be very helpful, as Marie-Ève said. When you have repetitive action, task is very useful to rely on this type of tools. But we still need judgments, professional judgments. So it depends again of the development of those software. But it's a challenge. It's a challenge also for the curriculum, for the chartered accountant, for the CPAs in general, for the auditors. They need also to get a good grasp of those new developments, and so we have also to adapt the training. But fortunately, usually the professional body they take care of this, especially in Switzerland. After bachelor or master, you need at least 4 more years of training within a big firm, within an audit firm.
Okay. 4 more years of training. Okay.
Plus experience. It's a huge 4 more years of training and an internship for your experience and so on.
Okay. Okay. Marie-Ève, would you also agree it's a bit of both? It's helpful, but also a challenge, or what would be your...
Yeah, I fully agree with Frank. I mean, we are all developing tools with artificial intelligence, but I mean, that's really impressive. Honestly, I see some demo and it's quite impressive to see the tool is doing all our work by itself. I mean, that's amazing. At the same time, I mean, this tool cannot exercise judgment. So that's where a little bit I'm struggling. I'm like, oh my God, this tool, I mean, that's really nice to have and that's really impressive, but I mean, they cannot replace the job of a human. So that's where we need to be a bit change, evolve. And that's where we have task force internally to analyze what are the skills that will be required for the next generation and how we can train them to these new tools because the world is changing. So of course, it's a huge challenge.
Hi, sorry, you cut out briefly for me. I think you might have been coming to me at that point. Sorry. Yeah, so again, I'm going to say it's an opportunity, it's a challenge. I think what it does provide is the opportunity to do a much broader review of accounts and the financial transactions. Suddenly you're not looking at a small sample, you're able to actually interrogate the entire ledger, which, you know, is much richer in terms of the audit work that can be undertaken. But I think it's right. We need to be training our people to be able to interact with this technology. And we do. And as Frank says, it's built into curriculum. It's constantly evolving. But also it makes a focus now on accountants as members of professional bodies actually committing to lifelong learning, because this is evolving at such a rapid pace that we need to keep constantly on top of it. So I think that's always going to be a challenge, I think. But I think the opportunities, I have to say, outweigh the negativities in this one. And let's face it, it's already there. It's only going to go in one direction. So we should embrace it, but we should be aware of the risks that it leads to. And I think this is the one place where, you know, if I bring in regulation, I do think policymakers, and we've been doing some work actually with EY in this space in the UK government, they need to act really quickly to, I think, refine and implement that regulatory framework for artificial intelligence, because it's really important that we build it in right from the, from this point onwards. And I do think longer term, it's going to, topic of ethics is going to become even more complicated in this space. So I think that will be an interesting one. I think the ethical principles will stay the same. I think the ethical dilemmas we face will be quite different.
I mean, if I listen to all of you, would you agree that we could say that maybe artificial intelligence will be able to perform maybe some boring tasks within the profession, but artificial intelligence will never be able to replace an auditor because it has no capacity of judgment, especially in terms of ethics. This would be,
yeah,
you would agree?
Absolutely. I think it will replace the routine tasks, and it will do those really, really effectively, but it will never be able to apply the judgment because the business changes continually. You know, how things are presented changes continually, the risks change continually, and you need that independent view. So it will never replace the judgment side.
Thank you very much. So now I'd like to ask a question to you, Frank. During the last 20 years, we have witnessed numerous high-profile corporate and accounting scandals worldwide. The most important including Enron, WorldCom, Satyam, and Wirecard. In your view, did these events have any consequences on the corporate culture in the accounting and auditing profession?
Oh, what I can say about this is the fact that the audit firms still need to operate, still need clients. So I don't. Maybe the culture have been adapted in terms of ethical issues, but beside this, it's still a requirement for most firms to be audited, to be certified, and I would say the business has to continue. I don't think any particular huge change beside the fact that you have now to take into account those ethical issues in order to avoid the cost of the reputation, as Maggie said initially. But maybe Emmanuel, that's my own perspective.
Maybe Marie-Ève would like to complement?
Yes, I mean, I've seen recently the impact of Wirecard, and I mean, we have discussed internally a lot this case with all the employees to understand what went wrong, why it happens, what are the root causes, and ensure that we are not facing this kind of situation. So, I mean, that's always a learning lesson when we have such cases. And I mean, for sure, I mean, the rules are a little bit stricter after, because we learn from those examples and we try to avoid this. So I would say that, I mean, our audit work is not changing, but the rules are a little bit stricter. I mean, because we see some deficiency at some places, we just want to avoid this situation. So I would say, yes, we learned from this. We learned from this, and rules are changing after these cases. And this is the same thing, I mean, when we have Lehman Brothers, then the rules related to Basel III are changing because everyone is learning from this. So I think that's normal.
But sometimes auditors have said that we're under a lot of pressure to do the work. They have enough time to do proper work because of the contract they had was too short. Would that be, in your experience, do you think sometimes it's an issue, like there's so much pressure, not enough time to do a proper deep work? Or
So this is one question that we are analyzing when we accept a client. Honestly, this is one question that I have to accept before going with the client. So if there is too much pressure on timing and we cannot do our work properly, we won't do it. And it's really true. And I'm having from time to time discussion with some client like, okay, I'm happy that you want to publicly disclose your result the earliest possible because there's like a competition who will be publishing the faster. But at the same time, we need to do our work properly. So, I mean, at the moment, we need to say no and say, look, we need at least 1 month to do the audit work, and we won't be able to finish because we won't do our quality job. This is the roots of our work. So yes, it's challenging. Yeah.
Maybe would you like to add anything? Or?
Yeah, just briefly on that one, because I think it is an interesting point, because as Marie-Eva said, there is this tension, isn't there, between timeliness and quality, and people want their, businesses want the results out, their investors want the results out, but actually there's a requirement on that audit to be of a high quality. So there is that inherent tension, and what we are seeing is a very much a change in focus from regulators, a very changing focus actually from audit committees, and so one thing that we're seeing, if I look at the UK, where they have looked again at the independence of auditors and had some recommendations from government looking at structural separation of the audit firm from the rest of the business. The Big Four have done that voluntary, so they have separated out their audit firm. What we're actually seeing is an increase quite significantly in audit fees as businesses recognise the actual cost of a good quality audit that's undertaken. So audit fees we've seen go up. I mean, I've heard of increases of over 50% on audit fees over the past 2 years. So what we're now seeing is business recognising, actually, we want to protect ourselves. We want to protect our reputation. Auditors need their reputation because they need to be trusted. And so we're starting, I think, to see quite a fundamental change in that space.
So I'll turn to Maria for next question. Members of the management have more knowledge about the organization than the auditors. Plus, it is essential for auditors to gain access to information provided by the management, regardless of its sensitivity. Based on confidentiality, auditors should not disclose any client information without appropriate permission or use it for personal gain. But at the same time, an auditor should report a client's illegal act to an appropriate authority. So an auditor may experience some kind of ethical dilemmas here. For example, if he discovers irregularities or missing or non-documented transactions. Have you experienced such dilemmas throughout your professional life?
It's my daily life. No, I mean, I'm working in the banking world, so we have, in addition to our role as statutory auditor, we are also working for the regulator. So we are performing audit to ensure that the banks are complying with regulations. So my task is to identify all those problematics that they did not comply with the rules. They breach regulation regarding anti-money laundering. So, of course, I'm dealing day to day with confidential information about clients, and I mean, in the private banking world, that's quite sensitive. So it's something we really we try to train our staff to be sure that we just put in our database the information which is really required for our audit. But at the same time, I mean, we have access to a lot of information, and I mean, we are if we are identifying some issue in the anti-money laundering world and the compliance work, we need to report it to the FINMA. So that's our task, and I'm doing this since a lot of years. So that's normal for me, and for sure, we're having some from time to time difficult discussion. From time to time, we need to agree to disagree with the client, because we need to stick to our task. And again, we're working for the board of directors, and it's important for them that they are aware if there is any breach in the regulation. And also FINMA, the regulator, is coming also on site for some clients. So I mean, if they're coming, and the impact will be much stronger than when we're doing our audit work. So it's better for them that we identify the issues and that they avoid these visits and the impact that it can have on their banks. So.
Is key for your work, for your daily work, and to justify also your actions. Maggie or Frank, any compliments or? Oh, okay, so my next question to you, Frank. There's a report of an institution called Carbon Tracker The report is called Flying Blind, the Glaring Absence of Climate Risk in Financial Reporting. It was published in 21. And that report found that more than 70% of some of the world's biggest emitters of CO2 failed to disclose the financial effect of climate risk in their 2020 financial statement. And 80% of the auditors showed no evidence of assessing the impact of climate risk during the audits. Many had made net zero pledges and faced significant risk from the climate crisis. So what do these numbers reveal? I mean, are businesses and auditors deliberately misleading the public? Or how would you interpret those numbers?
At this stage, and from my side, I would say exactly the opposite. They're not misleading at all, in a sense that without talking about the climate risk and the impact on the financial statement, for example, it's already difficult for the financial the accounting standards and the financial statement to measure perfectly the performance of a firm. We have there are many intangible assets that are not included in the financial statements, and it's part of the value of the firm. So already it may be misleading. And now we are at the beginning of new regulation when we ask company to show the impact of the impact of future events because of the climate change on their current financial statement. Maybe in the footnotes we can add something else. So actually, I would say that in a matter of trust, we are talking about trust. Maybe it's better not to disclose something when we're not sure about the value, about the impact, because at the end of the day, investors, the state, the stakeholders may come back later on. By the way, last year you say that the impact would be this value, or in 5 years later. So it's the responsibility actually of the auditors and the company to provide and to report certified account, but we are almost sure about their value and their impact. So it's easy, not from your part, but it's easy to ask many things from the firms, from the CPAs, but at the end you have to provide reliable values. You have to be able to check, to justify why those impact and so on. So I would say actually it may be the reverse. They are not misleading. Actually, the reverse would be if you provide a bias estimate on the impact, that would be misleading. So I'm not surprised.
Yeah, I think so. If I understand what you say, it's impossible because it's impossible to measure actually the impact precisely, so they cannot really make any clear statement. Or
that's not impossible, it's feasible, but which value, which impact, are we 100% sure that that would be the correct impact?
Yeah,
so
I understand. Thank you. Would you agree with that, Marie or Maggie?
Yeah, I think critical to this area, because it's a fast developing area, is we now have the standards out in terms of sustainability reporting. We have a consultation draft over assurance over sustainability reporting. And I think those frameworks are important because that leads you to understand, well, actually, on what basis or what information are you disclosing? How is it being disclosed? And therefore, what level of assurance can the external auditor provide on that? So I think it's an evolving space. I don't think it's necessarily deliberately misleading the public. I don't think that's the root cause. I think people are trying to be transparent, but I think the demands for transparency are going to significantly increase. And it is really good that we've got the standards now out there. And I think we've got to come on to a bit of that. And that we've got this sort of assurance element being defined more clearly and more structure around that, because I think that's going to help the stakeholder understand what they're seeing and what they're receiving.
So we have 10 more minutes, and I have a few more questions regarding sustainability issues and also regulation. My next question to you, Marie-Ève, it's also about sustainability, more precisely about greenwashing. Concerning international reporting standards, companies have some margin to choose what they report. And that inevitably confronts them with some dilemmas because they have to reconcile the demands of shareholders and other stakeholders with the growing focus on sustainability. So if you're an accountant working for an organization and you have to deliver information about its sustainability program, but actually you see that that sustainability program is mainly greenwashing, then you have an ethical issue. How could accountants make sure they don't consciously or unconsciously enable greenwashing to happen?
Yeah, we're coming back to this discussion about the regulation which are necessary in this area. And if I'm taking example in the world that I'm living, I'm in the banking sector. I mean, we are confronted with many banks at the moment which are promoting some products which are green. I mean, where people can invest and some green investment. But what is a green investment? There's no criteria at the moment defining what is a green investment. So it's really difficult if we don't have these rules defining what is green or not. Everybody is doing his own criteria and saying, okay, I'm green because I'm doing this, I'm green because I'm doing that, but you cannot compare everyone. So for us as an audit firm, what is really important is push the government to implement those rules and criteria and for us to perform the audit work completely. So yeah, I agree that, I mean, that's a dilemma if you confront with greenwashing in your organization. But I mean, again, it's about defining clearly the criteria for the auditors. It will then be to issue an assurance report which states clearly what are the criteria used by the bank, and then ensure that they are applied correctly.
Thank you. Now a question to all of you about regulation. Actually, this year in July, the European Commission adopted the European Sustainability Reporting Standards, the ESRS, and drafted by the European Financial Reporting Advisory Group, EFRAG. The standards provide supplementary guidance for companies within the scope of the EU Corporate Sustainability Reporting Directive. The adoption of the CSRD, along with the supporting ESRS, is intended to increase the breadth of non-financial information reported and to ensure that this information is consistent, relevant, comparable, reliable, and easy to access. But how do you see this evolution? Is it a first step towards a more standardized reporting format that could reduce regulatory fragmentation and maybe improve the comparability of disclosures? Is it a positive step for you in terms of regulation, or how do you assess this? Maybe Maggie?
Yeah, thanks. So CSRD, I think we're strongly supportive of CSRD, and I really do believe that it is going to elevate that corporate reporting landscape. I think it's going to really lead to far more meaningful environmental, social, and governance data being available and being able to be interpreted. So that is a huge step forward, and I think we've got to congratulate the speed of those developments. I think it is important, as you talked about fragmentation, we are very much a global body. We're very much supportive of global standards, and where global standards, where it isn't just one standard, making sure that they standards have interoperability so people can apply them, because of course companies don't just sit necessarily neatly within a border, nor do supply chains. So actually so many organizations will be caught by more than one, and what you want is genuine commitment and engagement by business, not lots of compliance activity to support reporting. But yeah, we're really supportive of CSRD and think it will be a very positive advancement in this space.
Thank you. Any other insights on this regulation?
Well, at least we may have some harmonization within the EU firms. That's the minimum requirement. At least, as Marie said, at least you have the same standard and the same type of reporting. Then there is a cost of this. When you're listed all stakeholders will look at your this type of reporting and may make its own judgment. But for small firms not listed, it's a lot of information, a lot of data. It's a cost for the auditors also. That will be some fees that those small and medium-sized firms will have to pay. Would it be useful for them, in a sense, for firms doing business to business? Who will read the financial statements? So it's maybe a cost. That's something that's it's a good way. It's in favor of the way to limit any climate risk. But who will read?
Yeah. Thank you. Yeah,
it's not obvious. It's an open question.
Good questions. I don't have the answer, but we reach soon the end of the discussion. Maybe 2-3 more minutes. Just on the one last important point, I think the European framework showed that the EU is sticking to one of major principle, the one of double materiality. It's a question of taking into account not only the impact of environmental factors and social effect on the company's profits, but also the impact of the company itself on nature and society. So is there an international consensus on this notion of double materiality? Is it likely to become a global standard? What would be your idea? Because I think there's different views between the EU and the US, and it's probably a big question. So maybe I will start with Maggie.
Yeah, I mean, this one is a big question. I think sometimes it's good to look at the areas we agree on. So double materiality, that's very much organizations considering, as you've said, that wide range of stakeholders. And they need to do that actually to be able to run their business effectively. So that is a good thing. But then we have to think, if you're considering all stakeholders, it does need to be proportionate, because as Frank says, who's going to use this information? Well, the more concise, readable and understandable that information is, the more they're going to use it. So there does need to be a view that not all stakeholders are as equal as others, I would say, in terms of the information, because the reporting ultimately needs to be balanced. So you can't report on a huge number of things to a huge number of stakeholders. It's just not feasible. I do think it's probably the area that's sort of biggest debated or viewed as the biggest challenge. I think materiality's always gone slightly broader. I think we'll start to see sort of more convergence over what it means in reality. But I think it's good that we're encouraging businesses to think broadly in terms of their impact on stakeholders.
Thank you to all of you for your insights, for your remarks. That was a great discussion. I think we have covered a lot of topics, a lot of challenges in terms of ethics, a lot of also ethical opportunities. And I think one of the two main challenges for accountants and auditors are related to either technology or sustainability. These are probably the two big topics, and I think we have covered a number of issues related to these topics, and also regulation is probably, since this year we have seen a major progress, as you stressed, and I think that's a very positive issue. And it's probably important in your daily work also. So thank you very much for your insights, for your time, and for the exciting discussions. And we hope to stay in touch and maybe to continue the discussion in the future. Thank you very much.
Thank you. Thank you for your invitation.
Thank you very much.
Thank you. Have a nice day.